streaming.
Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So we finally had that break above S&P 1700 today. Everybody's been waiting for it. It's a thesis Scott's been talking about, that psychological level that the media always harps on a lot. We finally got that break with a gap and go to the upside today. Yesterday we had that Fed announcement that everybody's really looking towards the September Fed announcement to provide all the insights about QE tapering, about whether they're going to start tapering already or whether they're going to wait for the economy to get a little bit better. So this one was more of a ho-hum type announcement. They, as expected, didn't come out with any curveballs. They, were a little bit dovish, but the market bounced around yesterday, and people were trying to decipher the action yesterday. Oh, is it a bad sign that we paired our gains into the close and finished negative around the flat line? Basically, my point was I wouldn't put any stock into the action yesterday. There was nothing new from the Fed. It looked like a lot of just algorithms moving the market around and trying to shake people around. And as expected, with the trend intact, the market gapped up and went to new highs today. So really constructive action. The market was able to work off a lot of its overbought condition over the last couple of weeks after breaking to new all-time highs. And the result today is, like I said, a breakout above that 1700 level. Cue the balloons, the music, everything. We've made it. But that doesn't mean, Scott talked about in his thesis S&P by 1700 by 2015. And we're already there middle of 2013. So you got to adjust your expectations a little bit. Doesn't mean that you don't watch the market anymore. The market's done going up, but you just got to adjust your expectations and stuff like that. We can take a look at the chart to give you a visual of it. I talked about we had that big gap up this morning on some nice data from Europe and China, and then we never looked back during the session, which is good to see. Very constructive, which is what we've seen from the market all year. Really impressive market this year. We're entering August, sometimes a quiet period for the market. Everybody anticipating that September Fed rate decision. So yeah, it could be a little bit quiet like we've seen over the last few weeks during August, but that doesn't mean there's not going to be stock-specific opportunities. Today, Facebook continues to be on the radars of traders after that huge gap and go after its earnings. Today, Facebook really found its footing well. We go to the chart, which seems to be having some problems. Not sure why it's pulling up Facebook. Anyways, there we go. You can see it on the 60-minute at least. I don't know what's going on with eSignal, but basically Facebook yesterday pulled in, gave a little red dog reversal signal after breaking back above that $38 IPO price. But today proved to be a buying opportunity as people bought the dip aggressively in Facebook, and it came back up right to near that IPO price again. Just below 38 is where it closed today. So I expect to see more upside in Facebook based on that big gap and the commitment to that gap. It's just a matter of whether it needs a little bit of time to rest, some range constriction, but I expect Facebook to be in the 40s before long. Apple continues to hang around, another high profile, and everyone watches. Positive earnings report when there weren't really high expectations. Formed a nice multi-day base after that earnings report, gap up, and then went to the upside today. It just sort of hung around. Take a look at the chart. See if we can get a daily chart on Apple. There we go, eSignal. Like I said, Apple resumed in a little bit to the last few months, and you can see Apple held higher today after the gap up. So constructive action still for Apple. Has this little resistance point right here that's trying to break above, that stands at around 457.10 is the exact price point. So that's the level people will be watching. Amazon bounced back impressively today after some lethargic action since the day after earnings. This was the bar the day after earnings that it was a mediocre report. They lost money when they were expected to make 5 cents a share. But it barely gapped lower at all, or even held in the previous day's range. Everybody was saying, oh, could this be the time when Amazon finally goes down? And what does it do? It rips to all-time highs again. Faded off the 3 days after that, but like I said, had some weakness today early, but surged back impressively up to climb back above the 8-day moving average. Impressive action there. GMCR, which was Mark Sperling's trade idea of the week earlier this week, continues to inch higher. It was listed with a action area here above this range, and it obviously broke above that over the last 2 days. It has about a week until it reports earnings, so I think it has some time to squeeze. Big short interest in GMCR. Really love this setup to get back to at least the highs of this range prior to that earnings report, and then it's anybody's guess. Tesla continues to hang out around highs. Will continue to be a focus of active traders as long as it holds up. And if it doesn't hold up, people love the two-way action in Tesla. because it's got a lot of beta, a lot of volatility, but really impressive that it's holding up as well as it has. Could challenge that $140 area here sometime soon. The banks were strong today. Something we talked about in Off the Charts last night, our premium newsletter, is the banks could be an area that see money rotate in after a period of sort of lethargic action. They had a really nice earnings season, the sector did. You look at a stock like Bank of America, has shown some leadership in this group recently. As leadership sort of rotates with the banks, but really nice move up, descending channel that you can measure an entry out of. Yesterday sort of gave you a false breakout on that Fed announcement, but like I said, that action yesterday was a little bit misleading. I don't think it really showed you much of anything, and some of the tails you saw yesterday I think could be largely ignored. And we saw a big gap up today and go, and it could take out these highs again. This pivot point is the area to watch after it broke the descending channel. MasterCard and Visa were in the news yesterday because a federal judge came out and overturned the Fed's authority to set caps on debit card fees. And those stocks were volatile. Were down big yesterday, rebounded back. We'll just take a look at MasterCard really quickly. MasterCard is less dependent on debit card and making money from debit card fees, so the snapback in that was much more impressive, and after a really impressive earnings report yesterday, MasterCard seems to be separating itself a little bit from Visa here. But that's been your daily recap for today. Reminder, 4:30 today in here, Mike Lombardo, the head trainer of the PDP program, hosting a webinar. So if you haven't seen the link to sign up on our site, make sure to do that before 4:30. Going to be a great webinar. Everybody who's registered will get the link of the recording of the webinar, so make sure you sign up even if you can't be here live. This has been John Darsie. Enjoy the webinar, everyone.